European equity is quite attractive, more so than Japanese, US or emerging market equity. We have asked Pierre Mouton of Notz Stucki to join us today for an update. Pierre, good afternoon.
Good afternoon, Nicolette.
Pierre, why is European equity so attractive at the moment?
Well, this is a combination of different factors that makes European equities very attractive today. First of all, reasonable valuations compared with other markets. That's the first point. And second, as can be seen on the chart here, is that there is a positive earnings momentum on European equities, which has not been the case, for example, in the US. It has been the case very much in Japan, but far less in the US. And with reasonable valuations plus positive earnings momentum, this is an attractive combination for investors. That's the first thing. Then you have also the fact that European equities can benefit from very low interest rates today in Europe. That's the one point. Another point is a weak euro, especially versus the US dollar, is favorable to European exporters. And then a very active central bank that has prevented all these tail risks to happen.
Japanese equity is also quite attractive.
Yes, they are. And as can be seen also on the chart, the earnings momentum is spectacular on Japanese equities. But we think that as of today, Japanese equities have performed so well during the last 12 to 24 months compared with European equities that probably there is much more to do on European equities than on Japanese equities today.
You're a bit bearish on emerging market equity. Can you tell us what one should be careful of?
Yes, we are quite cautious today for many reasons. First of all, the difference of Europe, for example. Most of the emerging markets are quite dependent on the price of commodities. And today we see that these commodity prices, and especially oil, are very weak, and there are many huge players in emerging markets that are dependent on the price of commodities. So that's one point. And second, we see that there are some cracks on the Chinese economy, and that makes us quite cautious because the rest of the emerging markets are quite dependent on the Chinese economy. And for that particular point, we are quite cautious today.
Are European indicators of the European macroeconomic situation supporting European equity in the short term?
Yes, they are improving. They are still quite weak. This is true, especially when compared to the US, for example. But this is on a positive path. So we think that the improvement in the economic indicators and the leading indicators in Europe is a positive factor. But it is still weak. By far, the US economy is doing much better than the European economies. But the trend, the actual trend in the economic indicators is quite favorable. We need more, of course, but the discount that we have on the price of European equities compared to the US equities makes us more tempted to buy today into the European space than on the US space, at least on a medium-term basis.
Any country that you favor more than another or others?
Yes, well, we of course the most obvious market is Germany, but you also have very good companies in Italy, for example, in Spain. So it's different. It's quite difficult to just point out one country compared to another. There are many national champions, international champions in each country, and you have to be quite selective, do your proper analysis of the companies, and then invest on them. But it's quite difficult to just point out just one country because, I mean, the European equity space is quite vast.
Pierre, thank you very much for joining us today.
Thanks a lot.